Assalamualaikum warahmatullahi wabarakatuh. Before that, let me introduce myself. My name is Diah Ramadhani with student ID number 2341260 from class AKT 23A. In this video I will explain the material on audit planning stages in the Accounting Audit Course 1. Audit planning. Audit planning is a design made by an auditor in conducting a comprehensive examination of an organization, where it starts from the initial stage to identify the client's scope to the final stage to report the audit results to the company or organization's management. The main purpose of conducting audit planning is to enable various types of audits, such as operational audits, financial audits, compliance audits, and other audits to be carried out effectively and optimally. What is a good audit planning procedure? Basically, audit planning is a bridge for testing work in the form of procedures to be carried out. This procedure needs to be carried out in order to produce good audit planning. In general, there are 8 stages of activities in the audit planning procedure that you need to do, including the following. 1. Scope of client acceptance procedures. Client acceptance and continuation procedures, which include decisions on client acceptance audits, both new and old clients. According to ISQC International Standard on Quality Control, 1. Every KAP must have policies and procedures in deciding on client acceptance. Generally, these policies and procedures regulate the background of the client company, ethical requirements of the client company, communication with previous auditors, if the previous year's audit was conducted by a different auditor, the need for experts in certain fields, selection of engagement team members, obtaining an engagement letter of engagement. 2. Gaining an understanding of the audit process with the client. The second stage in audit planning includes understanding the roles and responsibilities of each party in the audit process and the terms of the engagement. Generally, these elements are stated in the engagement letter or other form of documentation. 3. Explaining the overall audit strategy. The development of an audit strategy is intended to respond to the risk of misstatement in financial reporting. This activity is carried out by considering the results of analytical procedures on the conditions and business environment of the client company. This strategy can change as the audit process progresses if there are changes or amendments that have the potential to produce information that differs from previous expectations. Generally, the audit strategy includes the following: characteristics relevant to the audit process, such as the reporting framework used, reporting date, materiality level, risk assessment and decision to assess the effectiveness of internal control. Plan for utilizing available resources. 4. Selecting engagement team members. The members of this engagement team need to be selected by considering the competence regarding the industry in which the client company operates. In addition to technical competence, members of the engagement team are also required to understand the professional standards and code of ethics of accountants. Generally, members of the engagement team consist of partners, managers, senior audit staff and junior audit staff. 5. Considering the use of expert assistance. ISA International Standard of Auditing 620 specifically defines an expert as an individual who has the ability, expertise and experience that is qualified outside a particular field, outside of accounting. In making a strategic audit, auditors need to consider whether they will involve an expert, especially regarding the valuation of certain accounts in the financial statements that are material. 6. Understanding the client's business environment. A similar thing is stated in ISA 310. The client's business environment includes the internal and external business environment, the economic conditions of the industry, financial reporting regulations, and the impact of business competition. An overall understanding of the company's business activities is important in the auditor's risk assessment process because each industry and company has a different risk of misstatement. The results of this risk assessment will be used to determine how much audit evidence should be obtained. Adequacy of audit evidence. 7. Risk assessment. This stage is carried out after the auditor has gained sufficient understanding of the company's business conditions. Generally, this risk assessment is carried out by identifying the effectiveness of the implementation of internal control, by referring to the COSO Committee of Sponsoring Organizations of the Treadway Commission framework. 8. Analytical procedure line. ISA 520 on analytical procedures states that in performing analytical procedures, The auditor must consider the client's financial statements with company expectations, which can be presented in the form of a budget or forecast report, and the auditor, which can be presented in the form of the auditor's calculation regarding the estimated amount of depreciation expense. Financial information of companies in similar industries. For example, the auditor can compare the client's sales to billing ratio with other companies of similar size in the same industry. Financial information of the client's company in the previous period. This aims to see significant increases or decreases in certain accounts, so that the auditor can design certain procedures in order to respond to this. That's a little explanation from me. I apologize if there are any wrong words. That's all. Thank you. Wabillahi tawfiq wal hidayah. Wassalamu alaikum warahmatullahi wabarakatuh.